5 dividend growth stocks that all have a few things in common. Every single one of these stocks that we're going to go through are all on sale, all offer a decent starting dividend yield, but on top of that also have potential to grow extensively over time as far as price return goes. Not to mention they all have either a safe or very safe dividend. So if you would consider yourself a dividend growth investor that's looking to add some deals into your portfolio as of right now, make sure to stick around, drop a like down below, and let's get right into the first stock. Real quick for those that haven't already, make sure to go to the first link in my description and grab my new dividend investing ebook where I share exactly how I went from $0 invested to now earning over $6,000 on a monthly basis and over $1 million invested in the markets. Along with the ebook, you're also going to receive my custom dividend tracker where you can track your dividend progress on an ongoing basis and reach your dividend investing goals. So make sure to grab yourself a copy of my dividend investing ebook and the new dividend tracker today. It's the first link in my description. So the first dividend growth stock that is offering a potential buying opportunity as of right now, especially where it's trading as of current, offering a forward 5.3% starting dividend yield, is Toronto Dominion Bank, or ticker symbol TD. Now TD not only offers a 70 as far as dividend safety goes, so their dividend is pretty safe, although as of recently it was downgraded due to the whole money laundering scandal. But TD also has a dividend growth rate of around 6.3%, which we're going to look more into in a second here. TD's beta is 0.94, and like I sort of mentioned, where it's trading as of currently, it's offering dividend growth investors like yourself a potential to lock in some shares at one of the highest starting yields that we've seen over the last 5 years. Now, I promised you that all these names are dividend growth stocks, which means they have paid more and more in dividends over time. And for TD specifically, the dividend has more or less doubled, and this is over the last 10 years. Not to mention 13 years of consecutive increases, 167 years of dividends without a reduction. This could be a potential amazing dividend growth stock to add to your watch list where it's trading as of right now. The next dividend growth stock that's offering a buying opportunity just as of recently potentially is CVS Health, or ticker symbol CVS. Now in my portfolio, I unfortunately hold on to some Walgreens, and I wish I would have bought CVS instead. And even though CVS has its own headwinds, it currently still is offering an 80 on the safety scores as far as dividend safety goes, according to Simply Safe Dividends. The current yield that investors could potentially lock in as of right now, where it's trading since it's been so beat up in price, is almost 4.8% forward, which is by far the highest starting yield an investor has been able to get into, and this is over the last 5 years. Now, CVS has had some substantial dividend growth over the last few years, but beyond that, 27 years without a reduction. And as far as some of the other stats go, over the last year, the dividend has been raised by 10%, 16% on average over the last 20 years. So if you're an investor that's looking for some potential exposure to this area, healthcare services, this would be my top pick personally, but definitely add it to your watch list. Another dividend growth stock that's going through some issues and potentially offering a massive buying opportunity, this one's definitely been on my watch list, is of course SBUCs, or Starbucks. Now, Starbucks has had a recent downgrade as far as dividend safety goes, which again, take that with a grain of salt. In my opinion, Starbucks' dividend is still relatively safe. But investors could, as of right now, lock in a 3.01% forward starting yield, which as you can see here is the highest starting yield investors have been able to get over the last 5 years. So the idea here is that locking in some shares of Starbucks, getting paid around 3% per year to do so, not to mention Starbucks, in my opinion, could be trading well above $85 again within the next year. But also with that, Starbucks has had some impressive dividend growth, around 7.5% on the last year, 10% over the last 5, and 17% over the last 10 years. Also, Starbucks has had 13 years of dividends with increases and 13 years with a reduction. So as far as blue chip names in the portfolio, Starbucks has been one of my favorites. I think as of right now, I still have a small position. I did sell some off a while back in 2021 or 2022. But where Starbucks is trending as of recently, if this yield goes up to maybe 3.5%, I think Starbucks could be a massive opportunity for dividend growth investors out there. Another dividend growth name that's still offering a massive buying opportunity potentially is Bristol Myers. We've talked about BMY before. BMY, where it's trading as of currently in the mid-40s, is offering a 5.4% starting yield, which is by far the highest yield investors have been able to get into over the last 5 years. The dividend safety was updated recently, still relatively safe at 70. And for Bristol Myers, 17 years of dividend growth and 53 years of uninterrupted dividends being paid, 5% over the last year, 7% over the last 5 years, and 4% over the last 20 years. So as far as some exposure to pharmaceuticals, this could be one of the good opportunities investors could potentially add to their watch list if this is something they want to get into. Now, last but not least, maybe my favorite stock that we're going to go through in this entire video is PepsiCo, or ticker symbol PEP. Now, PepsiCo is still offering a potential decent buying opportunity. It has recovered a little bit since the most recent lows, but still investors are able to lock in a 3% plus starting yield, which in my opinion, whenever Pepsi is yielding above 3% starting, because of the potential price return and because of the dividend growth, PepsiCo is always an amazing stock to grab a few shares of. Now, the dividend for Pepsi is very safe. This company is massive and there's so much within it. The dividends have also been impressive. Dividend growth, 51 years in a row, 59 years of uninterrupted dividends, 7%, 7%, and 11% over the last 20 years. As far as safety goes and as far as locking in a high quality name, I don't think any one of us are going to argue that grabbing some shares of Pepsi where it's trading as of currently would be a bad idea whatsoever. So there we have it, guys. 5 dividend growth stocks that could be offering a potential buying opportunity where they are each trading as of right now. But now lastly, I want to hear from you guys down below. What is your number one favorite dividend growth stock that we went through that you would consider the best buying opportunity as of right now? Drop the ticker symbol in the comments down below. If you enjoyed this video, make sure to please drop a like on it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.